On today's hot sheet, I'm discussing President Trump's pause on tariffs for Canada and Mexico, what that means for the housing market, the slowest pace of home sales since March 2020, what that means, and quarter four home equity update on that. Today is Tuesday, February 4th, 2025. I am Byron Lazine, and the hot sheet starts now. Welcome into the hot sheet. Let me know which market you are tuning in live from today. Today, I'm up in my Connecticut studio live with all of you. It's a pleasure to be here. Hit that subscribe and notification bell if you're on the YouTube channel. If you're over on Spotify or Apple listening to the replay, thank you, and would love for you to consider leaving a review. We are almost 24 hours away from the BAM virtual event of quarter one. This is the first of 4 virtual events of the year. This is BAM Pro Bowl number 2. Last year, we had almost 5,000, and we're capping this year out at 5,000 signups for BAM Pro Bowl. It'll be tomorrow, noon Eastern time, live at noon Eastern time. That'll be, again, tomorrow, totally free event. This is the Super Bowl of real estate knowledge. Make sure you grab one of the remaining tickets if there are any left. Go to bamprobowl.com to see if there are any more available. We have Sharon Srivatsa, Jared James, Ken Pozak, Tina Call, and Kofi Narte, along with myself and Eric, the broke agent, doing the play-by-play commentary. This event is completely free. Check bamprobowl.com to see if there's any tickets remaining. And BAMX members, you'll get the replay inside of BAMX. Other than that, that'll be the only place that the replay exists. Can't wait to kick off BAM Pro Bowl 2 with all of you. Tons of entertainment wrapped into that. All right. Let's dive in now to Redfin News report about the pace of home sales right now. We talked about, and we gave an update on pending home sales, a little bit behind, where we wanted to be. I saw some remarks yesterday. Seattle, Laura was saying Seattle's up 25% on pending home sales. So every market's going to be a little bit different. But overall, pending home sales for the month of December were down. Okay, month over month down. And as we enter the beginning of the year, according to Alto's research, we're also behind last year's pace by just a couple percentage points. So are homes just taking longer to sell? Is that downward pressure of interest rates creating, less instant demand? People are waiting. People are taking their time. Let's see what the report says. Right now, a typical home is taking nearly 2 months to sell. And that might not, for those of us that remember, 5, 6, 7, or during the beginning of the recovery days, over 7 months of inventory, nearly 2 months to sell doesn't really sound like a long time. For any agents that are 2020 and after, 2 months to sell seems like an eternity. It's not. It's getting more to a normal place, but it is the slowest pace in 5 years, so it might seem abnormal to some. Okay, right now there are more than 5 months of supply according to Redfin, which according to Redfin that would be flip to a buyer's market. Now this is I will just highlight this. This is again according to Redfin. There are more than 5 months supply on the market. That is when you look at existing homes, according to NAR, that is way above what NAR is looking at for existing home sales. Okay. So this is the most since early 2019. Homes are taking a long time to sell. I don't know if I would agree with that, largely because housing costs are so expensive, but for buyers who can afford it, there are a fair amount of homes to choose from. Okay. So this is how Redfin is choosing to describe the market, that homes are taking a long time to sell. I would, as a real estate agent, as a professional, I would be out there educating my buyers or my sellers rather on the history of time on market. I don't consider up to 2 months a long time. Now, your market, your market, maybe, you're in a faster moving market, but 45 to 60 days is traditionally in a just normal market is about the time you would expect to be on the market, okay, before you even consider a price move. That 45-day mark, 30 to 45-day mark might be where you consider a price move. So maybe 2 months is pushing it. But it's not out of, it's not completely out of whack in what we've seen in normal markets. This is the slowest pace since the pandemic, so it might feel abnormal again. And this is according to this Redfin data as of January 26th. So this is recent data that Redfin is highlighting here. The typical U.S. home went under contract, sat on the market for 54 days before a seller accepted an offer. It's the longest span since March 2020, a week longer than last time this year. So 48 days last year, 47 days, now up to 54. At this time in 22, it was only 35 days. So, hey, we're talking a couple more weeks. We're talking a couple more opens possibly. There were 5.2 months of supply on the market. That's up from 4.9 months a year earlier. And so this is, obviously months of supply. We know what this is. This would be the amount of time it would take for the existing supply of homes to be bought up at the market's current pace. And so, this signals, remember, Redfin, they have 5 months as the equal market. So 5.2 would technically be above that and would be leaning slightly, just ever so slightly, into a buyer's market. 5 months is that equal point. Traditionally, the education around this has been 6 months. Redfin goes off of 5. There are some markets where you may be saying, hey, I'm a 4 months, I'm a 5 months to be an equal market. Here are some of the leading indicators that Redfin has put together on what's going on. This is just as a table that they've broken down with their economists from their economist page. Okay, so obviously we know where the 30-year fix is. We've been tracking that. According to MND, we're just up over 7%. The weekly's at about 7%. Applications we looked at yesterday. We haven't made much movement on applications here this year. Homebuyer demand, according to Redfin's, at the lowest level since June. And so this is as of the week ending January 26th, lowest level since June, and down year over year 1%. So they're seeing, but demand here beginning of the year be down, not up, despite optimism. Touring activity is up though 7% from the start of the year. So interesting that they've got home buyer demand down, yet touring activity is up. So are the same buyers just jamming tour after tour after tour? I don't know. Those kind of contradict each other. At this time last year, it was up 8% from the start of 2024. So touring activity up. Anyways, Google searches for home for sale is also up 14% from a month earlier as of January 26th. That's essentially unchanged from a year ago. So, I think that demand is still there. There's probably what we've seen in January is, January could have been a hotter month overall in the macro across the country had we been under 7%. And we didn't see that. So you just have that pressure that is going to stall the market. That pressure meaning the 30-year fixed rate. Some of the slides that'll be inside of BAMX. Big announcement for BAMX tomorrow on BAM Pro Bowl. For those of you that don't know, by the way, bamprobowl.com to get that announcement live. Some of the slides that'll be available in there are going to be your median sale price, which is up 4% year over year, according to Redfin. Median asking price up 5.2% year over year. So there you go. That's reflective of the housing appreciation. Home buyer housing payments is up 8% year over year. Pending sales is going to be down 9% year over year, according to Redfin. Altos Research had it at 2%. Everybody's market's going to be a little bit different, but we are seeing pending sales year over year now be a little bit down. Okay, so We'll continue to watch that. The 5.2 months of supply available on the market here. That is the most we've seen since pre-pandemic. It's been increasing year over year, 23, 24, now, into 25 months of supply. Now, this months of supply, because again, NAR's got it down closer to 3 months for existing, would tell me that this includes new construction, which is certainly in a buyer's market, 8-9 months of supply. For new construction for new homes. Okay. We've got 26% of pending sales go under contract within 2 weeks. So, 1 out of 4 homes go under contract within 2 weeks. That's a good number to know. Like, hey, only if we're looking to sell in the first 2 weeks, we probably got to lean closer towards a competitive pricing strategy, or at least get on comp pricing strategy. We don't want to go aspirational and try to sell in the first, if our goal is first 2 weeks, aspirational pricing, a price basically higher than market value, isn't going to be a strategy we want to do here. Only 1 out of 4 homes are achieving that mandate of the first 2 weeks. Homes sold in a median of 54 days right now, and that's up from each of the last 3 years, 4 years really plus. 21% of homes right now, though, are sold above the final list price. And so, I would, 26% of homes are sold in the first 2 weeks. I'm going to imagine here for a minute that a lot of those first 2-week home sales are the ones that are making it up this number. 1 out of 5 homes are selling above the final list price. Average homes sold on the 4-week rolling average for 98% of the final list price. That's down from where we were last year at this time, and it's certainly down from 2022 when we were well above 100% in the beginning of the year, and certainly throughout the spring. Okay, the home buyer demand index, which Redfin has down again, -1% year over year. Look where it was in 22 at this time, and 23. We're rolling essentially where we were at in 24 right now. So we're kind of riding that blue line, which was 2024. If you are watching and not just listening, you saw that there. So some of those charts, some of those key charts, anyway, will be available for you to just grab quickly if those are going to be any use to you in your communications inside of BAMX for BAMX members. All right, Adam came out with a equity report. Home equity right now holds steady around the U.S. during the fourth quarter as housing market remains strong. Okay, that's a different statement than we've heard from Jerome Powell as recently as last week. He said, he did another victory lap that he has basically put the housing market on its back. But Adam says, hey, the housing market remains strong. When what they're referring to here is these home prices. If you're a home owner, yeah, the market's strong for you. If you're a buyer trying to gain affordability or trying to get anywhere close to an affordable option for you on the buy side and not the rent side, doesn't feel like it's working for you. Equity rich portion of home mortgages dipped slightly, but that's because you've got new mortgages coming in at a higher rate, which is averaging that number out. But nearly 95% of homeowners continue to have property wealth built up. 95% of homeowners are equity rich. Okay. So you don't get that equity until you do something with it. Obviously, all of that is true. But only 5% of homeowners are either flat or potentially, underwater. The portion of owners seriously underwater are near a 6-year low. All right. It's one of those indicators that, there isn't a 2007, 8, 9 on the horizon right now, despite how unreachable the housing market feels for some buyers. Despite, when you go and run the numbers on a 30-year fix, it feels like the market's not working. Well, homeowners have tons of equity. Okay. There's not going to be this situation like 07 where you saw all these underwater property owners. Okay. The home equity underwater report shows that 47.7% of mortgage residential properties in the United States were considered equity rich in the fourth quarter. That means that the combined estimate amount of loan balances secured by those properties was no more than half of their estimated market values. That's what equity rich, according to Adam, means. That level was slightly down from 48.3. So 48.3 to today, 47.7. 48.3 was the third quarter. Still a huge number. The recent peak was 49.2 on the mortgaged equity rich homeowners. Still up, though, from 46.1 in the fourth quarter of 2023. So we're above where we were at the end of 2023 right now, even with 2 years of higher mortgage rates for mortgaged homeowners now having that equity rich situation. Okay, it's 13-year housing market boom right now. Again, usually housing, you go back 4 decades, usually housing is always in a boom situation, an appreciation situation outside of the GFC, which was something the markets and the global economy has just never seen. Same holding pattern continued for the portion of home mortgages that were seriously underwater. So just 2.5% of mortgage homes fell into the category of seriously underwater. Memory bank that one. Write that one down. 2.5% of mortgaged homes right now are seriously underwater. Mortgaged homes only make up about 60% of homes. Remember, 40% are cash. So that 2.5% number is even smaller. It's about, I'd say, half of that, like 1.25, 1.3, 1.4% of homes are seriously underwater, right? You wouldn't be underwater if you didn't have a mortgage. So about 1% of owners right now out there are underwater at a serious level. Okay, so you don't have a huge situation right now for those doom and gloomers that think we're getting into one of those 2007, 8, 9. Hey, only 2.5% of mortgages fell into that category in the fourth quarter of 2024. This isn't a big number. This is a very low number when you look back historically. All right. With a combined estimate of balances, loans secured by properties that were at least 25% more than the property's estimated value. So it's the same in the third quarter and basically unchanged from late 2023 at 2.6%. Here's Rob Barber, CEO for Adam. The last few months of 2024 marked pretty much a holding pattern for the housing market. We saw pending home sales, of course, go up and then in the end of the fourth quarter, then go down. It's typical for the slower fall home buyer season. Certainly wasn't a downer for homeowners who are sitting on historically high levels of property equity, thanks in large part to the endless increases in home values over more than a decade. Nearly half of all residential mortgage payers in the U.S. have paid off at least half their loans, leaving many with six-figure levels of wealth available to leverage anything from new home purchases to starting new businesses to paying off major expenses. If those rates were to go down, you would see people pulling out cash on a refi boom. You'd see more homes coming on the market to go buy a different home. See a lot of movement because people have equity to play with. The majority of states right now see an equity-rich portion of home mortgages slip quarterly, but remaining up annually. Okay, so it was down in 33 of the 50 U.S. States from the third quarter to the fourth quarter, but by less than 2 percentage points. So, right, like, look, you've got a number that's going, so high. There's going to be a cap out, and that's kind of what we're seeing right now. The annual increases, though, on this equity was led by Rhode Island. A portion of mortgage homes considered equity rich increased from 54.6 to 60+% in the fourth quarter. Missouri went up from 37% to 43%. Connecticut up from 42, Connecticut, where I'm sitting right now, 42.4% to 47.9. New Jersey from 46 to 53, and Illinois 28 to 33. What do those 5 states have in common? 3 of them are in the Northeast, obviously, but what those states overall have in common is low inventory levels compared to other areas of the country. Think Southwest Florida, think Texas, think Louisiana, think a lot of these areas where you've seen inventory come back in a significant, meaningful way. 40% of the inventory increase in 2024 was driven just by Florida and Texas. And so these areas still have low levels of inventory. That's pushing prices up even more. The more that appreciation continues to push up in those areas, the calculation of equity also pushes up. Okay. I don't love looking at it. Sometimes these numbers, they're good to look at. And, I would pull some of this data if I was in one of these areas to educate seller and to have some communication through my email and all of that kind of stuff. And of course, we do that every Friday for you guys at BAMX. But, I would want to have this information. But again, equity to me, it can change. It can fluctuate for a seller. So I don't want to rely on it for a homeowner, rather. I don't want to rely on equity. It's not useful until I have it in my hands. It's not useful till I go find that next dream property and I'm pushing my equity into that to bring that payment down lower or to just get into the house of my dreams. The opposite end for states where you had the biggest declines on equity would be Florida. Makes sense. The inventory's gone up. The prices have a lot of pressure, right? We saw Tampa on Case-Shiller was the first of the major metros to actually show negative price year over year. Florida is down year over year 54% on this equity rich for mortgage homeowners to 50.9%. Still a big number. Utah down 53.7% to 51.1. Utah's seeing an increase in inventory. Arizona down 52.7 to 50.9. Oregon's down 51 plus to about 50, almost 50%. Idaho's down 57.6 to 56.1. So even these ones that are down, not huge numbers on the equity. All right. Let's just take a quick look. Recapping yesterday. Remember yesterday's Housing Wire headline? Okay. This was the headline, and I showed that funny tweet from Logan Mohtashami over at Housing Wire that showed President Trump playing poker. It must have been an AI generated tweet and a little meme there. And here was the article, January 31st, Friday, from Mohtashami. Is President Trump bluffing on tariffs? Logan's take on this was that, yeah, this is going to be a bluff move. These tariffs, if we get into a trade war, Canada, trade war, Mexico, not going to be a good thing for the U.S. economy. Trade war, China, right? We're seeing, I think as of today, you're seeing the tariffs at 10% go into effect on China. Okay. China now is retaliating with additional tariffs back to us, 15%. So Logan's take on trade war, bad. Okay. Trade war, not good. You saw the markets react to that yesterday. Dow, S&P, NASDAQ, boom, 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 all down yesterday. Okay. But then what happened? And within 48 hours, this all happened. And this was what Logan Mohtashami over at HW anticipated, that this was a bluff, that this was a negotiating tactic. And within 48 hours of announcing tariffs, implementing tariffs, you saw that yesterday, the U.S. struck a deal with Canada to pause tariffs for 1 month. That was shortly after a deal was struck with Mexico, a similar deal. Okay, so both Mexico and Canada and the U.S. have agreed to pause for a month the 25% tariffs that President Trump was planning to place on both countries. Okay, so President of Mexico and the Canadian Prime Minister both agreed to pause for a month and work things out going forward. Okay, I'm going to get to what this means for home builders. Home builders had written a letter, I think as recently as yesterday, to President Trump, or to the administration at least, saying, hey, let's not do this on building materials, right? Remember the executive order that was signed in the first week? Excuse me. That was signed in the first week of the administration that was like, hey, we're going to have a mandate here to lower housing costs. Well, the NAHB, National Home Builder Association, was saying these tariffs aren't going to actually help that. So let's not do that. Now they can maybe breathe a sigh of relief, at least for 30 days. Here's what Trudeau Justin Trudeau says Prime Minister of Canada had a good call with President Trump, and Canada is going to implement a $1.3 billion border plan. So this is the victory lap that the administration, Trump administration, White House is taking, saying, hey, we're extracting a $1.3 billion border plan from Canada because we basically played the trade war chicken game. You can agree, disagree with that, but that's their position there. Reinforcing the border with new choppers, technology, personnel, enhanced coordination with our American partners, and increase resources, stop the flow of fentanyl. Nearly 10,000 frontline personnel are and will be working on protecting the border. So the borders are basically. And so there you go. So these proposed tariffs will be paused for at least 30 days. This is Trudeau's words. Okay, this is his tweet. So you would assume it's his words. Proposed tariffs will be paused for at least 30 days while we work together. So that shows us what Logan Motoshami was basically saying. Like the Prime Minister for Canada is saying, hey, we're going to have conversations over the next 30 days. So the Prime Minister of Canada is saying we're in a negotiating phase right now. The U.S.'s position was tariffs. Canada said we don't like these tariffs. We had a conversation. Now we're going to be continuing to converse for 30 days. That's a negotiation. So I think what Logan is saying is like, hey, hope this is a bluff. Looks like it is a bluff. And the bluff is really just to get into the negotiation. So we'll see there. Now, going back to why this is such a meaningful and I think this will be inside. Let me just go BAMX here real quick. This should be inside of your BAMX. This here it is. Yeah. So if we're just looking from John Burns Research and Consulting here, this chart tells a huge story why the NAHB, National Home Builders Association, was like, we don't want any tariffs. Okay. Country import share for hardware. Okay. You got China, Mexico, Canada, okay, as the three biggest. Country import share, plumbing fixtures, fittings, trim. China, enormous. Country import share, major housing appliances. China, Mexico are the two biggest there. Country import share, glass and glass products. China, Mexico. Country import share, sawmill wood products. You've got Canada, just almost at 80% there. Country import share, small electrical appliances, China, and then Mexico way behind, but China, a big one there. So now entering, we already see the market responding negatively to, what's going on today with the China news. You saw futures in the market come back in a big way yesterday after Mexico, Canada had agreed to pause 30 days. Then now China today slowing that down. Keep an eye on it. Big thing is 30 days. It looks like National Association of Home Builders can breathe some sigh of relief. And just going back to the core belief here from Logan Motoshami, doesn't see tariff policy being the staple of the economic policy. If tariffs were a major economic policy, they would be implemented as soon as possible because you need them to be in place for many years to foster real change. So again, seeing this as, that was from yesterday, again, seeing that as a negotiating tactic. 20% of the hardware, again, comes from Mexico. 70% of sawmill wood products coming from Canada. So home building industry, when you look at Mexico and Canada in particular, regardless of what happens in China, those are two big ones that'll help the home building community. And we'll just have to keep our eye on this and see what other impacts this might have on the economy. What we're focused on really for home buyer affordability in the short term is going to be the 10-year. Now the 10-year is up a little bit. Remember, like that bad news yesterday actually pushed the 10-year down, the bad news with tariffs. And now we're back up to about 4.54. We were down to almost 4.5 even yesterday. Still, when you look back 30 days, it's the lowest point we've been in the last 30 days. The 30-year fixed right now held at 7.05 yesterday, so still holding firm, just above 7%. Haven't had much movement, haven't had much volatility in the 30-year fixed. That's rare when you look back the last 2.5 years, but that's where we've been for seemingly all of this year, really just above 7% here so far, 1 month into the year. BAM Pro Bowl tomorrow, noon Eastern. Make sure you sign up, bamprobowl.com to get your free spot there before that fills up. Later on today, here on the YouTube channel, we'll have a new Real Word podcast. Just make sure you go right down below if you're on YouTube, hit subscribe and hit the notification bell. I'll see you on the pod later on today. I'll see you at Pro Bowl tomorrow. I'll also see you at Hot Sheet tomorrow. So we got a lot coming up here. Bam. Appreciate all of you. Until then, of course, toodaloo.